Hello, my name is Karen Jimenez. I, along with Yulia Bukanaskaya and Lung Wee, make up Team Lancelot, and we will be going over our company analysis on ExxonMobil. Our outline, I will be going over the introduction of the company, vision and mission statement, as well as the SWOT analysis. Yulia will be going over our strategy and competitor analysis, and Lung will be going over our concepts and conclusion. So a brief history on the company. In 1870, John D. Rockefeller and his associates formed the Standard Oil Company in Cleveland, Ohio. In 1911, Standard Oil broke up into 34 unrelated companies, which included Jersey Standard and Vacuum Oil, which distributed Mobil oil products. In 1926, Jersey Standard created a new blend of fuel named Esso, which was taken from the initials S and O from Standard Oil. In 1966, Vacuum Oil Company officially changed its name to Mobil Oil Corporation. In 1972, Jersey Standard officially changed its name to Exxon Corporation. And in 1999, Exxon and Mobil merged to form ExxonMobil Corporation. The company does have product lines in which markets fuels and lubricants under 4 brand names, Esso, Exxon, Mobil, and ExxonMobil. They have 3 divisions, upstream, downstream, and chemical, which specializes in the oil and gas exploration, production, refining and marketing, and petrochemical manufacturing. In 2017, its revenue was $19.7 billion in earnings, $33.2 billion in cash flow from operations and asset sales, and had a 9% return on average capital employed. The graph shown does have the 3 divisions divided up by its earnings after income taxes minus the corporate and financing, which resulted in the $19.7 billion. Its market share is divided up by 3 segments. The upstream segment market share for Q4 in 2017, the company had 12.55% of the share. The downstream segment, the company had 34.21% of the market share, and then the chemical segment, the company had 66.99% of the share. Its vision and mission statement, taken from the website, is that ExxonMobil Corporation is committed to being the world's premier petroleum and petrochemical company. To that end, we must continuously achieve superior financial and operating results while simultaneously adhering to high ethical standards. ExxonMobil has closely followed this vision and mission statement as they are one of the leading companies in their industry. They are also the largest publicly traded company worldwide. They also do focus on the interests of their customers, their employees, and their shareholders, and also invest in the safety and quality of their products. To go over the SWOT analysis, some of the strengths that the company has is its strong brand and reputation. With over 100-year history of success, the company does have security in its future, and it does also have instilled trust in its established customer base. It is also world recognized with its recognition as one of the largest sellers of fuels and lubricants. It is easy for them to, and is more accessible for them to expand into other countries. And also it has a high investment in its research and development. They have invested over $1 billion in their R&D. With the history of Jersey Standard, their researchers were the ones that were able to create the industry standard for producing gasoline. And so ExxonMobil does invest in their R&D to continue into next generation technologies as well. Some of the weaknesses that the company has is that while they have an environmental management initiative, their business operations do still impact the environment through pollution, air emissions, oil spills, and those are just to name a few. And of course, those can result in lawsuits, which cause financial losses for the company. One example is in the case of the city of New Jersey, where there was contamination of wetlands, marshes, and waters at refinery sites that ExxonMobil owned. And so that resulted in a settlement of $225 million. There's also negative publicity of the company being a corporate greedy giant. When upstream loses business, there are mass layoffs and downturns. And so employees lose their jobs, but corporate executives still receive their bonuses. And also oil is still their primary source of business. Just in 2016, only 2/3 of their reserves were replenished. 2/3 of what they produced were replenished. And so what will happen when the oil runs out? Some of the opportunities that the company has is that there is a rising demand of energy resources, and that demand is only expected to increase in the coming years. And so that is an opportunity for ExxonMobil to continue to generate revenue and to continue to grow. Coal, oil, and gas are primary resources that are consumed worldwide, which are resources that ExxonMobil does operate in. And so this gives them the opportunity to be able to expand and into countries and into areas with unused reserves. And another opportunity they have is with the billion-dollar revenues that they are generating, they have financial backing into looking into other types of projects, such as liquefied natural gas, instead of just primarily focusing on oil. And some of the threats that the company has is high competition. While they are still a leading company, there are others as well, such as Royal Dutch Shell, also known as just Shell, and Chevron are also leading the market. And so, of course, with high competition, there is a fall in revenue and and profits as well. Another threat is the world economy. We've all seen in the news the fluctuating gas prices and also the price of the barrel. And so low oil prices and reduced oil imports does pose a threat to business operations. And lastly, international operations, regulations and political instability can pose a threat on how ExxonMobil does its business and conducts business in other countries. And now Yulia will be going over our strategy and our competitor analysis.